The Magnificent Seven struggling this year, each of the stocks down more than 23% from their most recent 52-week high amid ongoing tariff uncertainty. This as the mega cap companies begin reporting first quarter earnings. Joining us now, Paul Meeks, Harvest Portfolio Management CIO. Paul, great to speak with you this morning. Talk to me about your expectations for the Mag 7 as we kick off Mag 7 earnings with Tesla today. How disappointed do you think investors might be?
Well, with Tesla, the way I look at this stock is a year or so ago, the stock traded as low as 140. And at that time, its fundamentals were much better than they are today. So even though Tesla is way down, I think it can go lower. I don't think they will have anything positive to say today. And of course, Elon Musk and company will try to dissuade you into thinking they're no longer an EV company. So don't look at their cars, but they're a autonomous taxi company. Believe it when I see it. So I don't expect much from Tesla, but negativity. I haven't owned the stock in a while. As far as the rest of the Mag 7, I've had a very refined list. I'm fairly bullish on Meta and Amazon long term. I'm not playing right now any of the others. And even those two stocks that I favor within the group, I'm a little bit dicey on. So what I would tell people is, even if you're tempted with these stocks down so much from their tops, just wait until they report their results. Wait till you clear that news. People always feel like they need to maybe try to make an aggressive bet heading into earnings. I just think for all these companies, the earnings period, whether they make their quarterly guidance or not, no one is going to be able in this environment to give much confidence with their guidance. And so I'd rather wait to hear that.
You have some of your industry colleagues, such as Wedbush's Dan Ives, calling this a code red moment for Tesla. I wonder what you would like to hear from Elon Musk on the call about how he's governing his time, knowing that everybody can see where he had spent his time in previous quarters, in the last 2 quarters specifically. But now when you have this kind of critical moment for car and vehicle sales that are reaching this impasse that investors are going to want to hear more about how they're going to turn that around. What do you want to hear about how Elon Musk is spending his time on a go-forward basis?
Now, there had been some rumors a couple of weeks ago that he was going to wind down his Doge commitments. Haven't heard any follow-up, particularly from the people that matter, the president and Musk himself. But yes, I would like to see. Of course, I'm not positive on the stock at all. I'm negative on the stock. I would like to see him commit to a deadline where he finishes his government duties and moves back to managing his companies.
I want to broaden the conversation out to the tech sector overall, Paul, because we saw some selling of these big tech Mag 7 names prior to President Trump's so-called Liberation Day. How are you able to parse how much of the selling we're seeing in these big tech names is policy uncertainty that's dragging down the major averages, or an unwind of valuations that got a little too close to the sun?
I think some stocks, after big runs, right? So it wasn't just last year, it was multi-year. Their valuations got stretched. But I think what's happened is, in addition to the Trump, induced madness, there are some folks that are wondering, particularly with the latest rumors that Amazon and Microsoft may be dialing back some of their AI data center spend, if that game is up, or have we reached peak AI infrastructure revenues for the companies like NVIDIA that are involved with it. So I think all those factors, but the biggest factor is the economic environment.
And so then at that juncture, what is the timeline that investors should be grading these companies on in order to make sure that they're actually fulfilling all of the fervor that they put forward around the AI thesis within their own business models?
I think what happens is most of the hyperscalers will confirm their AI capex, and so people will feel a little bit better about that. I never thought that at this stage in the game here in 2025 that we would have yet a lot of use cases of AI. And then recently last week, Johnson & Johnson said that it's dialing back its hopes for aggressive AI use. And of course, that was a pillar for AI in healthcare, which is supposed to be a big deal. And so I don't expect much as far as the deployment and the monetization, right? The deployment is one thing. The monetization is another. I never really expected that, with or without Trump, to be much of a focus until 2026.
Paul, I get that your buyer strike continues, but you say that you confidently hold several names: Netflix, NVIDIA, Meta, Broadcom, and AppLovin. Talk to me about NVIDIA specifically. What is your bull case for NVIDIA long term?
So I think NVIDIA never really got to that point that you referenced earlier, where the valuation got stretched, because its run over the last several years has been driven by earnings. Earnings have outpaced its valuation. So now with the stock sub 100, maybe there is some AI pull in from some of the hyperscalers. Obviously, they will be dinged with the tariffs on China, but I still think the demand for their products is voracious, and that they will continue to do quite well. Maybe numbers come down a little bit, but right now the stock is trading at a fraction of its PEG ratio, and it should be, even for value investors, pretty attractive here.